Good evening, my fellow small business owners, and welcome to Tax Code Advisors. Today, I have a really good topic especially for new business owners, people who are just getting started. So this is a real case study from a client who had set up an S corporation last year on their own, or I think through some other firm, and that was it. That was the transactional relationship, just to set up an S-Corp and forget about it. There was no consultation done. They didn't really try to understand their business, what they were doing, how are they going to run this business, how are they going to grow this business, what are their goals, are they working on retirement plans, are they working on insurance, so many aspects of business that goes on once you start a business. But there was no conversation like that. And I don't blame the tax people either, because sometimes clients just want a transactional work done and that's it. They don't want to have another conversation. They don't want to pay for consultation. They don't want to sit down with them. They just kind of walk away. So I'm not blaming anyone. I'm just saying what the facts are. So now comes 2024. Client wants to do taxes. So he's ready. New business. He's excited. He got all his paperwork in order. He had his bank statements, his credit card statements, his expenses. He is ready to go file his taxes. So here comes to Tax Code Advisor and says, Deepak, can you help me out? File my S-Corp taxes. Absolutely. We're going to love to do that for you. Why not, right? So I'm all excited. I'm like, okay, yeah, that's what we do for a living. Why not? Let's help you out. One problem. When I look at his bank statements, I don't see any money going out for his payroll taxes. And now I had to call him up and I say, hey, we're going to need to have another conversation. He'd be like, what's wrong? I'm like, what's wrong is that you did not run any payroll last year. He says, well, my CPA didn't tell me to run payroll. I'm like, why would he? You need to tell him once you have an income, you run a payroll. So, or you do a consultation. He got millions of other things to do. Why would he, assume that you're making money? You went to him to set up a company and that was it. And he went on to do his work and you went on to do your work. So it's your job to run payroll. He says like, well, my friend told me that I don't have to run payroll. I can, because it's a corporation, I can just take dividends out of it. Like, dividend. It's not like C-Corp. C-Corp pays the tax and pay out dividends. So even that is, I don't know where you get that from. So that doesn't make any sense. If anything, what you get is a profit share, right? You get distribution out of your S-Corp. So you had some income, you had some expenses, you're left with some profit, and now you're taking that profit as a distribution. That's what you're doing. You're like, exactly. That's exactly what I'm doing. I'm taking all the money on distribution. So what is this all talk about payroll? Okay. I'm like, let's step back for a second. You set up a company. That means this company is something other than you. It's a different entity. You have a different federal ID number. You're filing a separate taxes for it. You understand that, right? It's something other than you. That's why you set it up. You're like, yeah. I'm like, then somebody got to run that company. Somebody got to operate that company. Somebody is making the decisions. Aren't you? Go like, yeah. I'm like, who that somebody is? You're like, well, that's me. Like, then you got to pay yourself. You can't just work for free. So anyhow, I think he didn't really quite understand that S corporations have two part of compensation. One is their income, W-2 income, and the other part of the compensation is the distribution you take. So whatever is left over, you take it as a distribution. The income, the one that you take as a W-2 income, that gets taxed like any other W-2. So many of you guys watching this probably already have a W-2. So let me talk about W-2s for a second. What kind of taxes are taken out of W-2? And then I'll try to explain you what the problem with this particular case is, how that can turn into a nasty problem for someone, and if I can help this gentleman in some way. So let's go through those steps. So first of all, let's try to understand our W-2. So when you take a look at W-2, first thing you would see is we have FICA taxes, or if you are self-employed, you probably heard of self-employed taxes, right? Self-employment taxes, commonly known as SE taxes. Okay, so 15.3%, that's what we are paying right now in those taxes. Half of it is paid by you, other half is paid by your employer. So that's how that taxes work. Then you have your income tax, depending upon what kind of tax bracket you are in and what what kind of exemptions you have claimed. So based on that, they're taking out some federal income taxes. Depending upon which state that income is generated in, you probably have state income tax that you're paying. You also have local taxes that sometimes get taken out of that. Then what do you do with all that tax money? Does that sit in your bank account? No. You take that money and you deposit it, to the whatever authority it needs to go out to. If you don't do that, whether it's for yourself or for your employees, that can get you in a lot of trouble. Those penalties are nasty. You don't want to do that. If you owe the government the money, they want that money to be paid, like on time. They don't like it to be delayed. They are in a lot of debt. They have bills due. They need to make those payments. So please don't mess around with them. So, and then on top of that, you have deductions. Maybe you're doing some, HSA plan, HRA plan. Maybe you have insurance. Maybe you have Roth going on. Maybe you have 401k going on. You could have a lot of things going on. So there are some deductions going on there. And then lastly, you have reporting. You take all that and you got to properly file reports. So you see there's a lot going on behind that one W-2. It's not just W-2. There's a lot of work right behind it. When you don't take a salary from your S-Corp, you're not doing any of that work. And you're pissing off a lot of people. Think about it, how many parties are pissed off and for how many reasons. Somebody can come knock your door and like, wait a minute. You did not pay your FICA taxes. Okay. You did not pay the federal government. Wait a minute. You also did not pay the state. Wait. You had some reporting requirements you did not file. And so on. So you can piss off a lot of people by not doing that. That is exactly what happened in this case. He had an S-Corp, he had distributions, he had income, he had profit, but he pissed off all of these people by not taking a payroll. So you can see how serious this gets. So what do we do now? Well, what? He didn't do the payroll. What do we do now? Now we are in 2024. That was 2023. Can't blame it on his CPA. I mean, that's not his job. I mean, you as a business owner needs to know this. And that's why I remind you guys and make sure you're staying on top of that. So there are a few options for him. One option is he don't do anything and just forget about it. He's my client as of 2024, but I still need to file his taxes for 2023. So it's sort of like my problem too, because, I got to sign his return. Can't sign his return without properly making sure he's educated and he understands what he's doing. So step one, I got to let him know that, look, you messed up and this is a risky business at this point. It is possible that one of these people knocks on your door. So when you make a mistake, what can you do? Well, one option is you can hide. You just pretend like nothing happens and move on. And I see sometimes people try to do that, but that's not a good strategy. There's a good chance you will get caught. And when you do get caught, there will be some bad penalties you're not going to like. Especially in a new business, you don't want to get caught up in something like that. So that's your option number one. Option number two, you can act a little smart. So you can pretend that you actually did run a payroll. Maybe you do a payroll by manually filing the paperwork, and that paperwork just arrives there late. Don't ask us to do that. We don't do that, please. We do everything electronically. No paperwork here. So don't ask us to do that. If you wanted to do it manually, you can do it yourself. If you want to find somebody else who wants to do it manually, good luck to you. And it's so messy, it's so nasty. I don't really recommend it, but it's an option. It's an option. So that's your second option. And the third option is we can say, look, okay, we already messed up by not really doing a payroll, but how can we manage it now? Meaning, how can we reduce that liability to the minimum? It's not going to be perfect, but at least we'll look honest. At least we will look like we're trying to fix things. At least we'll look like we're trying to do the right thing, So if somebody asks, we can say, look, I'm sorry. We made a mistake, but we tried to fix it. I didn't know. I went to tax code advisor, spoke with Deepak, and he suggested, let's try to fix it this way. you know, maybe the other end, whoever is sitting on that other end, they'll be a little bit more sympathetic to you, and they'll say, okay, well, I will let it slide, and we'll just do it the right way the next time. So I'm going to show you how I would try to fix that. Not really a fix, but at least look somewhat decent on paperwork. So what you can do is, because today is January 24th, and we have not, we still have time, we can issue a 1099. So depending upon who run that company, whether it's you or your spouse, whoever materially participated in the company, whoever was responsible for running the company, doing day-to-day work, that person, we can issue a 1099. And let's do maybe $40,000, $50,000 worth of 1099. And we issue that 1099. That 1099 will go on the 1040 on that person's Schedule C, and we pay the taxes. Just straightforward. Don't try to be any fancy anymore. Just pay the taxes and close the books. If for whatever reason IRS get hold of this and they say, look, hey, you didn't pay the taxes, what are you going to say? You're going to say, yeah, I know that. I made a mistake, but I went to tax code advisors and they suggested, look, yeah, you're supposed to file the payroll. You didn't. You should. And they set me on a payroll starting the next year. So you take a look. Starting January, I am running my payroll regularly. But he said, look, you still owe these payroll-related taxes, which you haven't paid. And, at least you should try to pay those taxes. And he suggested one of the way I can do that is by filing my Schedule C with my 1040 and paying those taxes. So I know it's not the right way to do it. I understand that, but at least I was not trying to cheat. I was not trying to get away with it. It was just a pure mistake, not like I was trying to do tax evasion. And hopefully that appeal will make sense to the person on the other side. And they say, okay, that's more reasonable. Let this person slide and let's move on. I mean, they're not really looking out for people who are just making silly mistakes. They're really looking out for people who are making some tax evasion. Now, don't quote me on this. Not like, if you make a silly mistake, they're just going to let you get away with it. They might not, but I'm just saying, wouldn't you, somebody who's reasonable, who's legit, they're trying to do the right thing. It's a new business. They're hardworking people. They're doing the right thing. They're trying to grow the company. What do the IRS want? They don't want to shut you down. They want your business to grow. You're a great contributor to our economy. You are working so hard. You're building new business. They want to see you successful. The more money you make, the more taxes the U.S. government will earn from you. So you are a cash cow for them. So they love you, But my point is, just be honest, just be realistic, and sometimes that's just the best way to tackle that situation. So anyhow, if some of you guys are in that situation, then that's one thing to do. A couple of reminders as I'm getting towards the end of this subject is, number one, if you are going to issue 1099, then you have till the end of the month. January 31st is your last day if you want to do it without penalty. After that, it will be $60 per 1099 you miss. So that's not just only for, in this case, but anyone that earned more than $600 from you in 2023. Now, there are a lot of details related with that. We have other videos who talk in great detail about that, so I'm not going to go into that. You can watch any of those videos. But just want to put it as a reminder. Second thing is Corporate Transparency Act. That's also new this year. It's in enforced. It's in action. So if you set up the company last year, you have till the end of the year, but might as well go online and file your beneficiary information report. If depending upon which state you are, you might have an information report that you need to file with that state. So take care of that. And lastly, get your tax work ready. It's January. I want to see all of your files in the office definitely by the mid-February. So that way, give us some time to work on those. We want to give you quality work. We want to make sure everything gets done right. Make sure we have enough time to discuss in case something comes up. So we want to do the right thing. To do that, I need your support. I need your help. I need those files as soon as possible. Some of the events that are coming up in the month of January and February. Well, we're end of January anyway. Number one, we have our financial outlook calls. That's going to be coming up next week on Friday, obviously. So you can join that, and where we discuss all sorts of financial related stats in that one phone call. I think that's something you have never seen before. We try to take a look at what's happening in the market and at least try to understand it. So that way we can make a better financial decision. So that's coming up. We have a real estate market trends call coming up So that's another one that you can join. We have a live event coming up in Milpitas, California. I will be there. Sanjeev ji will be there, and we will be talking about taxes for 5 hours. How can you save on taxes? Obviously, a lot of times you guys have tax questions. You want to just ask us. That will be a perfect platform. We don't charge you for consulting fees that time. Other than that, if you call our office, you want to talk to us, you have a tax matter, we do charge consulting fees. So you got to set that up. But at that event, we don't charge you anything. So please show up, ask your questions, get them answered. That's our way of saying thank you to you. So that's coming up. And then we will have live events coming up in Austin, Dallas, Houston. So busy schedule for the month of February. So all you have to do is register and show up. If there's anything I can do to help you out, don't hesitate to reach out to me. If there's a subject matter that you think that I should talk about, anything you guys need clarification on, shoot me a message on WhatsApp and I'll try to make a video and share that with you guys. If you want me to speak at your event, you want to organize an event, you want to partner up with me on some of the events, I'm available. Talk to me. All right. I'll look forward to seeing you very, very soon. Thank you so much.